Sarnoa. First and foremost, my name is Ezza Farahain, binti Haffizan Adam. Today, I will be presenting about Elliott with theory. But before that, what is the definition of technical analysis and Elliott with theory? Technical analysis is a trading discipline employed to evaluate investments and identify trading opportunities in price trends and patterns seen on charts. Technical analysis believes past trading activity and price changes of a security can be valuable indicators of the security's future price movements. Meanwhile, the Elliott with theory is a form of technical analysis that looks for recurrent long-term price patterns related to persistent changes in investor sentiment and psychology. The theory identifies impulse waves that set up a pattern and corrective wave that oppose the larger trend. Moving on to the next section, which is wave degrees. The above labeling convention is a combination of that shown in the Elliott wave book and that used by sharp charts Elliott tools. This labeling convention is used to identify the wave's degree or level, which represents the size of the underlying trend. The large degree waves are represented by uppercase Roman numerals, the medium degree waves by simple numbers, and the small degree waves by small case Roman numerals. The trends begin with the largest wave, the grand supercycle, and work their way down to smaller waves. The cycle wave, for example, is 1 degree larger than the primary wave. Most charters will only use 1 to 3 wave degrees on their charts. In fact, trying to apply 9 wave degrees or even just using the labeling convention in the order provided can be quite difficult. The highest degree wave can be labeled with uppercase Roman numerals. The middle degree wave with number 1, 2, 3, 4, 5, ABC, and the lowest degree wave with lowercase Roman numerals. This divides the wave shape into 3 distinct groups for labeling. On all time scales of trend, market prices alternate between an impulsive or motive phase and a corrective phase. According to Elliott's model, impulse are always broken down into a set of 5 lower degree waves that alternate between motive and corrective character, so that wave 1, 3, and 5 are impulse and wave 2 and 4 are smaller reverses of wave 1 and 3. Wave 1, 3, and 5 in figure 1 are motive wave, and they are categorized into 5 smaller degree impulse. Wave 2 and 4 are corrective wave that are further subdivided into 3 smaller degree with label A, B, and C. In a simple term, a motive wave is a path movement towards the main trend. This means that every motive wave is an advance in a relay. Motive waves are divided according to certain rules in 5 smaller waves. Types of motive wave are impulse, leading diagonal, and ending diagonal. The impulse wave is the kind of wave we are using to show how the Elliott wave structure is assembled. It is the commonest motive wave on the market and easiest to find. First subwaves are like any wave of reason, such as 3 wave of motive and 2 wave of correction. It is marked as a structure of 53535, but it has 3 unbreakable rules defining its formation. If one such rule has been breached, the structure is not a pulse wave and the suspected pulse wave needs to be relabeled. The 3 rules are: wave 2 cannot exceed a 100% retracement of wave 1. Wave 3 can never be the shortest of the first 3 waves, and wave 4 will never overlap with wave 1. A motive wave that appears as a subdivision of wave 1 in an impulse or as a subdivision of wave A in a zigzag. The leading diagonal in figure 4A is a subdivision of wave 1 in an impulse. The leading diagonal in figure 4B is a zigzag subdivision of wave A. Leading diagonals are typically distinguished by overlapping wave 1 and 4 as well as which shape. but overlap between wave 1 and 4 is not a requirement. It may or may not occur. A leading diagonal can be subdivided into 53535 or 33333. The examples show a leading diagonal with a 53535 subdivision. An ending diagonal is a type of impulsive motif wave in Elliott wave theory that will be found in the subdivision of fifth wave or whole C wave in a structure. An ending diagonal C wave or fifth wave commonly shows an obvious wedge shape with an overlapping wave 1 and wave 4. This will subdivided into 33333. However, an overlapping wave 1 and wave 4 are not required conditions that must be met. The overlap may or may not happen, thus it is acceptable for there to not be any overlap. These structures will appear in either bullish or bearish markets in all time frames. For reference, shown at the above there is a couple of bullish examples the above mentioned wave C and fifth described. There are a few conditions that ending diagonal wave have in common with a regular impulse. Firstly, the whole structure will be 5 wave, however it will be subdivided into a formation 33333 instead of 53535. Secondly, the wave 3 will not be the shortest of the 5 wave move, thus either the wave 1 or the 5th wave will be shorter than the wave 3. Finally, the 5th wave of a bullish market ending diagonal will have a lower momentum reading, such as on a relative strength index indicator where it will be showing some divergence compared to the wave 3. Correspondingly, in a bearish market ending diagonal, the wave 3 will have the lower momentum indicator or RSI reading when compared to the wave 5. Corrective waves are those that move in the opposite direction of the trend on a larger scale. Corrective waves are typically made up of the 3 sub-waves. The types of waves are zigzag and flat correction. A single zigzag is a 3-wave corrective structure with the letters A, B, C on it. 535 is the sub-wave sequence. The A and C wave with 5 sub-waves are multi-wave, while the B wave is corrective, often with 3 sub-waves. In an impulse wave, the zigzag is known to form a sharp style of correction and usually appears in the second wave position. The flat correction is a 3-wave correction with sub-wave forming a 335 structure. It is also known as an ABC structure like the zigzag. Wave A and B are both corrective in this case, while wave C is motif with 5 sub-waves. The pattern is called a flat because it moved in a sideways direction. The fourth wave of an impulse wave frequently has a flat, whereas the second wave rarely does. Moving on to the next section, which is the personality of Elliott wave principle. According to the Elliott wave principle, collective investor psychology or crowd psychology oscillates between optimism and pessimism in recurrent sequence of intensity and time period. These mood swings produce patterns in market price movement at all levels of the trend or time scale. Approximately half of the first wave observed are part of the basing process and are heavily corrected by wave 2. Many people believe that this is another chance to trade in the direction of the previous trend, and if that trend was down, many will sell short. Nevertheless, market breadth and volume will gradually expand. The other half of the first wave will rise from the previous correction's large basing price movement. These are typically dynamic and only moderately retrace. This is a likely location for a wave 1 extension. Wave 1 is so widespread that the majority of profits are eroded, usually resulting in lower volume and lower volatility. This indicates that selling pressure is trying on a bear market. During wave 2, however, most investors are convinced that the bear market will remain steady. Third wave, are strong and wide. They are usually unmistakable, as confidence in the new trend is obvious. Wave 3 generates the greatest volume and price movement and is the most probable wave. The third wave of a long third wave is probably the most volatile change in this new trend and is accompanied by price breaks, continuous caps, expansion in volumes, and a rise in width. Almost all inventories will participate in Wave 3 for an inventory index. It provides the greatest indication of the correct number of waves as they unfold due to the dynamics of that wave. Due to the obvious alternative coloring, the fourth wave could be predictable in both depth and form. They are usually the same grade as the previous wave 2. They tend sideways and create a base from which to start the final wave 5. With wave 4 for an inventory index, delay stocks tend to build and decline. Fifth wave tends to be less dynamic and slower than the previous wave. In most cases, less volume and width will accompany them. Obviously, if the fifth wave is the wave that is attended, the price change will not be the case. Optimism is extremely high with the advance of the fifth wave, despite a reduction in width. Elliott wave theory provides value as a diagnostic tool for identifying potential commercial opportunities by providing a structure to organize price movement, information to form graphic representations which are easy to understand. Even beginner traders can start using the theory to inform their strategies with a broad understanding of the rules of this theory. However, this theory also has limitations which could lead to complications and inaccurate findings. The Elliott wave theory is more subjective in how modeling is identified, while Fibonacci patterns or similar tools offer clear ratios and thresholds which traders can look for. These patterns must be determined by traders themselves, and pricing movements that mark the beginning and the end of a wave may vary from one trader to another. Some critics argue, therefore, that this theory is too arbitrary to offer consistent trading guidance. In a nutshell, the Elliott wave theory is used for understanding market psychology and the context of the price chart. To be concluded, there are three core rules in the Elliott wave principle. Your analysis of the wave must correspond with the Elliott wave rules, or the count of the wave is incorrect.